Welcome back. Now, from year-end 2023, Nigeria's monetary authorities had its job cut out for it, even as analysts had anticipated a challenging yet promising landscape for Nigeria's economy in 2024. Among other things, it needed to clarify the nation's interest rate policy, arrest spiraling inflation, and foreign exchange volatility. In this report, News Central's Perpetua Fasanmi-Peter assesses the policy thrust of the Monetary Authority in the first quarter of 2024 and how it has been able to address pressing economic issues within its purview.
The Nigerian Naira opened 2024 at a rate of 907 Naira 1 kobo per dollar at the official market, and by the end of the month, it depreciated by a whopping 37.6% to 1,455 Naira 59 kobo, largely driven by a further devaluation of the Naira. The devaluation saw the currency lose over 33% within a single trading session, from 891 Naira 90 kobo per dollar on Friday, January 26, to 1,348 Naira 62 kobo per dollar on Monday, January 29.
Thing is on the high side. Everything, both Naira, if Nigeria can even try, our government can, let us stop of this using of dollar. Because dollar, Ugu, they are calling dollar.
To restore stability in the market and ensure the Naira finds its true value, the CBN started rolling out several guidelines and circulars, from the harmonization of reporting requirements of foreign currency exposure of banks to the removal of the allowable limit of exchange rate quoted by INTO and a renewed guideline of international money transfer services, all in one day.
Right. I think we might actually see a bit of sanity. And I think in the next couple of days, we will actually see the extent to which some banks have excess dollar cash, right? Because they have to unwind that particular position. And if the amount is significant, we will actually feel the impact, at least in the official market.
The CBN earned itself a new name in February, Circular Bank of Nigeria. This is not unconnected to the fact that it seemed to release between 2 to 3 circulars per week, wrapping up the month with at least 13 circulars, prominent among which were circulars on cash reserve requirement framework, allowable channels for payout of BTA and PTA, foreign currency cash pooling for IOCs, revised guideline for bureau de change operators, mandatory reporting of foreign exchange transactions, and sales of forex to BDCs to meet eligible invisible transactions.
Trader like bureau de change, they are saying its capitalization is 2 billion. So if care is not taking what you are running away, you come and meet it in your front. So that capitalization is a huge concern. From 35 billion to 2 billion. The most worrisome one is the compulsory deposit, forcing the bureau de change to keep a huge sum of 200 million as caution deposit in court. I think that will negate even the principle of the global practice.
The CBN also started adjusting the exchange rate for goods clearance to reflect what is obtainable in the official window, starting with a 42.7% increase from 951 Naira 94 kobo per dollar to 1,356 Naira 88 kobo per dollar on the 2nd of February.
Just saw on the news that they've increased the cargo rates. So that's another problem for the new week from tomorrow. Those who have cargo already in Nigeria, they can't clear. Those cargo on water, they can't clear because of the changes. You have to inform people on time so they will know what to do. So the problem is complex.
February also saw the first meeting of the Cardoso-led Monetary Policy Committee 7 months after Nigeria's last MPC meeting. Here, the MPC hiked interest rate by 400 basis points, causing business owners, economists, and the organized private sector to complain bitterly.
What we need out of the economy is what is short-term that can actually sustain businesses, by particularly micro and small businesses. And that's why we believe that instead of seeing growth, we may begin to see the other side of it, may begin to see more companies dying.
But for financial market analysts, the MPC had no option other than maintaining a hawkish stance against inflation. At the March meeting, the MPC for that tightened its nose against inflation by 200 basis points, leaving the benchmark interest rate at 24.75%.
Raise the MPR by 200 basis points to 24.75 from 22.75%.
These contractionary monetary policies, so the rate hikes, they are not indefinite, right? So the central bank does not intend to leave these rates, or the MPC doesn't intend to leave these rates. I think that at the moment, in the short term, in the medium term, such bold moves have to be made, not only to rein in inflation, but also to restore investor confidence in the economy.
The Apex Bank wrapped up the quarter with a new set of capital thresholds for Nigerian banks, whilst also excluding retained interest from the calculation of banks' share capital.
Last year, so the banks already had in mind that truly something was going to happen in regards to capitalization this year. It's just clear that the CBN wants to have the banks inject fresh capital into their business.
While there are still concerns that the stability in the foreign exchange market is not backed up by production and is merely administrative, these policies of the Cardoso-led CBN seem to be working as the Naira has continued to appreciate in the official market. Although the policies seem to be accompanied by short-term pains, consolidation of these policies with support from the fiscal authority could turn things around for Nigerians and the Nigerian economy. In Lagos, for News Central, Perpetua Fasanmi-Peter.